Is the S&P 500 approaching a critical inflection point? Valuation metrics like the cyclically adjusted price to earnings, cap ratio, and the Buffett Indicator are signaling historical extremes. These elevated readings suggest U.S. equities are priced at exceptionally rich levels, heightening the probability of a valuation-driven correction. Understanding this context is crucial for strategic portfolio allocation. An extensive analysis of the S&P 500 since 1932 reveals the index has spent 95% of its time within an upward-sloping logarithmic regression channel. This channel, bounded by two standard deviations, defines the market's long-term structural trend. The S&P 500 currently trades between +1 and +2 standard deviations, approximately 1.5 SD above its long-term trend line. Historically, the index occupies this elevated territory less than 15% of the time, underscoring how stretched current price levels are relative to long-term structural expectations. This deviation suggests accumulating corrective pressures. While mean reversion pressures build, momentum-driven bull markets can extend beyond fundamental fair value. The index could advance toward the upper boundary, E+2 standard deviations, implying a potential upside target near 7,700. This represents an estimated 12% additional upside before a statistically anticipated adjustment phase. Based on nearly a century of structural trend analysis, the S&P 500 appears to be in the process of forming a cyclical top. This short-term peak could realistically materialize anywhere between current levels and the 7,700 threshold, after which an adjustment phase would be statistically anticipated. Nevertheless, as long as the S&P 500 remains confined and advancing within this established logarithmic channel, the long-term upward structural trend remains intact.
Thanks for watching. That's all for today's update. Don't forget to like, subscribe, and hit the notification bell for more in-depth market analysis. See you next time.